What's going on, everyone? Welcome to Exploring Investments with Justin. Today we'll be covering 3 different stocks that I'm watching moving into May of 2020. The first stock of the 3 that we'll be covering will be Boeing. The second one will be Disney, and then we'll end it off with Nvidia. And moving forward, I'll be putting out a video each and every month covering 3 stocks I'm watching moving into the next month. So be sure to look out for those videos at the beginning of every month. So starting with Boeing, they've got 2 main business segments. The first one being their commercial business, which accounts for about 42% of their revenue. Then they've also got the defense, space, and security business, which is about 34% of their revenue. So between these 2 segments, that accounts for about 75% of their total revenue. Now, they do have smaller businesses such as their services, but for the most part, 3/4 of their revenue comes from these main business segments. So if we look into the commercial side of their business, you'll see that they supply airplanes for almost all the major airlines through several different offerings, such as the 737 and 747 Boeing airplanes. And if we look at their defense, space, and security side of their business, we'll see that they supply a wide range of products used by the US military. And this segment involves the research and development, as well as production of both manned and unmanned military aircraft and weapons, as well as surveillance and missile defense systems. And Boeing is actually the second largest defense contractor behind Lockheed Martin. And every year they account for about 20% of the weapon procurement budget for the Department of Defense. So there's a wide range of products that Boeing offers through their commercial side of their business, as well as the defense, space, and security. Now, if we look at their stock price, this is a company that's been hit hard due to the massive decline in the number of people taking flights. And prior to the crash that we experienced in the market, this was a company trading at around $350 a share. And at one point was even down almost 75% and was trading around $89, but has rebounded slightly to about $133 per share. Now, while Boeing has been hit hard due to the global issue, combined with the massive decline in air traffic, this crash could also partly be due to the grounding of the 737 MAX. Now, back in March of 2019, aviation authorities across the world grounded the 737 MAX due to 2 accidents that unfortunately took the lives of almost 350 people. And because of this grounding, the stock was hit hard at the time. And because of these unfortunate events, this has hit their business pretty hard, as most of the major airlines have canceled around 200 orders of the Boeing 737 MAX. And the grounding of the 737 MAX is expected to last until at least August at the earliest. And if we turn to the financials of the company, we'll see that total revenue for 2019 came in at about $76 billion. But unfortunately, given the global issue paired with the grounding of the 737 MAX, it might be a couple of years before we can see Boeing get back to where they used to be. Now, if we look at their balance sheet, we'll see that they have about $10 billion in cash and cash equivalents, with about $7 billion in short-term debt. So overall, their balance sheet could look stronger, but at least they have more cash than they do short-term debt, so that should be able to get them through these tough times. Now, it has also been reported that they're burning through about $5 billion each and every quarter, and this has led them to raise $25 billion through bond offerings, and the company has come out and said that they're not going to have to raise any more money. Now, at a $5 billion per quarter burn rate, this should be enough to get them through at least 2020. And that's assuming that 2021 is anything near normal. So I do see Boeing getting back to where they used to be. The question is, how long will it take? Now, I do see things getting back to normal, hopefully around 2021, but this isn't a guarantee. And the good news is that they do have a healthy backlog with about $350 billion in their airplane segment and another $64 billion in the defense, space, and security segment. So overall, they've got well over $400 billion in backlog, and that should easily get them through 2020, given that 2021, like I said, is a little more back to normal. So if we were to see a pullback in the market, Boeing is definitely a company that I would like to have in my portfolio. But I'd like to see the price drop back down to around $115 per share before I start this position. So now moving into Disney, this is a business that's been around for nearly 100 years, being founded in 1923. And at this point, I'm pretty sure almost everyone has heard of Disney. So if we look at the various business segments of this company, we'll see that 35% of their revenue comes from the media network segment, and this includes ABC, Disney Channel, and ESPN. Then they've got their parks, experience, and consumer products, where they get about 37% of their revenue, and this includes the Disneylands and Disney Worlds that are found all across the globe, as well as the Disney Cruise Line. And then they've got their studio entertainment segment, which accounts for about 16% of their revenue, and this includes studios such as Pixar, Lucasfilms, and Marvel Studios. And the last segment of their business is their direct-to-consumer products, and this includes ESPN Plus and Hulu. So if we look at the stock price of the company, they were down 40% at the March lows. However, they have rebounded 23% to $105 per share. Now, the main driver behind the stock price falling so hard is due to the theme parks across the world having to shut down, as well as various movies that were delayed due to filming restrictions. Now, if we turn to the financials for this company, we'll see that they made $75 billion in revenue and $10 billion in profits. And over the last few years, they've shown good growth in their total revenue. However, their net income has kind of remained stagnant since about 2017. And this could be due to them reinvesting so much back into the company as they try to grow their direct-to-consumer products. And if we look at the balance sheet, they have about $5.5 billion in cash and cash equivalents. However, they've got almost $9 billion in short-term debt. So this isn't the greatest balance sheet, but because of their diverse revenue streams, they should be able to get through these tough times that we're going through. So one of the big opportunities I see for future growth from Disney comes from their direct-to-consumer products. So as I'm sure most of you have heard by now, Disney Plus was released in November of 2019 and has managed to amass 50 million subscribers in the first 5 months. And to put this in perspective, Netflix has about 150 million paying subscribers. Now, the fact that Disney Plus can amass 50 million subscribers in the first 5 months shows that there's significant growth ahead, especially considering that Disney themselves originally only estimated to have about 60 to 90 million subscribers by the end of 2024. So they've essentially already met this goal and will probably far exceed the 90 million subscribers that they anticipated by the end of 2024. So moving forward, I do think that this will be a big growth opportunity for them. So I think the biggest question for this company is, when do the theme parks reopen and how long before they get back to normal? But we have to assume that once the economy reopens, people are not going to be flocking back to theme parks or movie theaters or most businesses. And even at the current stock price of $105 per share, this is still an enticing investment for me. So that's kind of how I feel about Disney right now. And we'll move into the last stock on the list, which is the one that I'm probably the most excited about, and that's Nvidia. And this is a tech company that designs GPUs, also known as graphics processing units, for gaming and professional markets, as well as systems chips for the mobile computing and automotive industry. And they also provide parallel processing capabilities for research and scientists, which is crucial to research and development. So for those of you that aren't sure what parallel processing is, it's essentially a type of computation in which many calculations or the execution of processes are carried out at the same time. Now, essentially, what this does is it takes larger problems and divides them into many small problems that can be solved simultaneously, thus making research and development much faster and more efficient. So now Nvidia's business can be broken into 4 main segments. They've got the gaming segment for PC gamers. They've got their data center. They've got their professional visualization, which revolves around AutoCAD and making 3D models. And then they've also got their auto segment. So if we start with the gaming segment, they are the leaders in GPUs for gaming, as their revenues are more than triple that of their competitors. And this comes at no surprise given that they now have over 200 million plus gamers using their GeForce graphics cards. And as you'll see when we look into the other segments, they're not showing as much growth in this segment, but this is because they've established themselves as the leaders in the gaming industry. And I do think they'll continue to innovate in this industry. However, we just won't see the massive growth that we will see in some other segments. And jumping into the data center segment, we'll see that over the last 5 years, they've had a compounded annual growth rate of 72%, which is pretty incredible. And as you can see, their products are used in almost every major cloud provider, such as Amazon Web Services and Microsoft Azure. And what you'll also see from this slideshow is the exponential growth in the number of registered NVIDIA developers. And what this means is that more and more people are learning to build apps on NVIDIA platforms, which include access to their Deep Learning Institute, where they receive hands-on training in AI and accelerated computing. So I do see massive growth ahead in this segment. Now, I do want to quickly turn to their balance sheet, where they have almost $11 billion in total cash with $0 in current debt. And this is especially important given that we're not quite sure yet how the global issue is going to affect company earnings. So the segment that I'm most interested in is their auto segment, as they recently unveiled what they call the world's most advanced processor for use in autonomous vehicles and robots. Nvidia has reported that their new Drive AGX Orin chip can perform up to 200 trillion operations per second and will be capable of scaling from level 2 to level 5 autonomous driving. And I believe this will be a game changer for Nvidia as more and more automakers look to take on Tesla in the race to full self-driving vehicles. For a while, Tesla actually used Nvidia's chip, but recently stopped using them and created their own self-driving chips. And the reason these chips are going to be so important is because the faster cars can compute and analyze data, the better they'll be at detecting any hazards on the road. Like, for example, if you're driving your car and a kid runs into the middle of the street in front of you, your car has to not only detect that there's a hazard in front of you, but also relay that information back to the cars saying, you need to stop in this much time and you have this much distance. So I think moving forward, a lot of the other automakers are going to be using Nvidia's chip to compete with Tesla's full self-driving. And because of the high growth that I see moving forward for this segment of their business, this is a stock that I'll be watching. And I do believe moving into the future, Nvidia will play a big role in the advancement of technology, as well as making faster and more efficient products. So those are the 3 stocks I'll be watching in May of 2020. Make sure to leave a comment below letting me know what stocks you're watching and what your thoughts are on these 3. Thanks for watching, and I'll catch you guys in the next one.